Bandhan Bank put out its Q2FY21 numbers and they were nothing short of a stellar set. Let's walk you through the particulars and how the various parameters fared. Now, being a microfinance lender, people were worried about the collection efficiency because the assets are very granular for a bank like Bandhan. So we keep hearing this term, granular deposit base. So that basically means is that there's no deposit which is too large. Every deposit is small and there's a lot of small deposits that make up a very large sum but on a granular basis. Same way for assets for banks like Bandhan, they don't have big corporate exposure, they don't have a lot of exposure to HNIs, so there's no individual client who's got a very high loan outstanding with the bank. Instead, what they have is a whole host of smaller regional customers who have very small ticket loans, and that's what we call granular assets. Now, typically when a pandemic happens, the asset quality fears for a bank like Bandhan were all these smaller MFI borrowers might have gone back to their hometowns or their villages, might have not have been accessible, and hence collections might have become a very costly and difficult process. What this quarter performance really does is breaks all those false ideas about whether the bank's collection efficiency will be able to hold up. So firstly, let me just reiterate that collection efficiency is back to pre-COVID levels in excess of 90%. Now, why is that so important and why is that so healthy? Because it ties up to everything: asset quality, credit cost. It all gets worse if your collection efficiency doesn't improve. So when your collection efficiency is improving, you can automatically bring the credit cost lower. You can also bring the chance of delinquency lower. You can also make the asset quality more stable. So that has happened. As a result of this, the bank obviously doesn't feel need to make provisions. So the provisions have dipped massively Q on Q. They're almost 1/3 of what they stood in the last quarter, which goes to show that the management is confident that they don't need to provide for any more COVID-related stress. This just reiterates that MFI segment is very resilient. The bank is now really focusing on retail, auto loans, a bunch of other loans. They also have a big housing portfolio now, which is doing very well, and housing loans are doing well for all banks. So Bandhan will benefit from that as well. Just to walk you through the particulars of this quarter, PAT was 920 versus 970 last year. Provisions 394 versus 849 last quarter. NII 1900 versus 1500, up 26% YOY. NIMs at 8 versus 8.2 Q on Q, so very stable NIMs. Gross NPA improving to 1.18 versus 1.43 Q on Q. Net NPA 0.4% versus 0.5% Q on Q. And there is also limited chances that there will be too much restructuring required in this book because, like I said again, the assets are very granular, and there's also very small chance that you'll have a large spike in NPAs coming in now because the collection efficiencies have drastically improved from Q2 to Q3, and management is guiding for even better in Q3 and Q4. So keep your eyes out on this one. Stock has responded very positively the last 2 days in trade ever since the numbers came out.